So we started a session and we started talking about fundamental analysis. We said fundamental analysis is one of the analysis that we do. Fundamental analysis is one of the analysis we do in the markets to tell us when to enter the markets to buy and to sell, to trade, right? Now, like I've always said, when it comes to trading, the difference between those that make money and those that don't make money is understanding where to buy and where to sell. If you know where to buy to make money all the time, you make money all the time. If you know where to sell all the time and it sells all the time, you'll be able to make money all the time, right? So now we know that it may be difficult for you to know how to do that all the time, but you want to be able to know how to do it most of the time. You don't have to win in the forex market 100% of the time for you to be successful. You just need to win enough times. You need to win 60, 70% of the time. Then you manage the rest of the trade. When we say risk to reward ratio, you use risk to reward ratio, and then you are able to make good money. You're able to consistently make good money from the market. So that's what it is. Now, risk to reward ratio is something I've talked about before, but I'm going to explain it a little bit further so that we'll understand it. Not in this class, it's a different class than this, but it's important to understand that risk to reward ratio is a major key to winning in the forex market, major key to winning in the forex market. So, but first of all, you need to know where to buy and where to sell, and that's where analysis comes in. Analysis comes in. So we have fundamental analysis, we have technical analysis, then we have sentiment analysis. So fundamental analysis is the first thing. We discussed it the other day. We talked about news events. We said there are global events. We said there are global events and there are economic events. There are global events and there are economic events. So the global events, there are lots of things that happen in the world, like the Russia-Ukraine crisis, like the Russian-Ukraine war. That's a global event, right? That's a global or world event. Then we have that's a global or world event. There's an earthquake somewhere and all of that. All that accounts for what we call global or world events, right? Mostly they are not things you can predict. They happen. Let's say there's a terrorist attack on an oil well in Saudi Arabia. That happened several years ago. A terrorist attack on the, there was a terrorist attack on World Trade Center. That was many, many years ago. But about 2 or 3 years ago or so, there was a terrorist attack. Iran actually sent a missile that hit an oil depot in Saudi Arabia, and an oil depot that was holding 5 million barrels of crude oil, right? So it hit them, it was a weekend, and then the market blew up over that. So that's what we call a world event. It's not something that is scheduled. It's not a good thing. It's usually something that is bad, right? Look at the earthquake that happened in Turkey the other day, right? Thousands and thousands and thousands of people were killed. Massive, huge lands were destroyed. Now, all of that are global events that nobody envisages, right? And those things affect the market, right? Then we have economic events. Economic events are mostly scheduled. Okay, economic events are mostly scheduled, which means that we know that this event is going to happen. And then when we talk about economic events, we are talking about events that have to do with inflation. Inflation in the economy. We are talking about events that have to do with employment, unemployment or employment. Okay, employment. Even global events, this one also involved, right? COVID falls into this category as well. COVID, right? COVID, earthquakes, and wars, like the Russia-Ukraine war, all of that, right? So economic events, like I said, this has to do with inflation. It has to do with employment, right? All of those things matter. Whatever it is that affects an economy to positively or negatively, whatever affects an economy positively or negatively, what are the things that are happening in the economy right now? Usually we have the things that have to do with economy, they are scheduled. They are things that don't happen overnight. Okay, if unemployment suddenly rises in the US, yes, it's something that is not also planned, but the way it is released, the way that data is released is scheduled, is planned. Okay, I'm going to give us an example of this, right? And then what I'm going to just do in this class is to look at some of the most important events that move the market. Okay, we talked about a few of these things the other day, but I want to focus more on the events that move the markets, right? So, like I said, we have inflation, we have employment, we have a couple of other data, right, that affects how the market works. And these, like I said, they are scheduled. They are not like the global events that are totally out of our control, right? Now, these ones, some of them could also be out of our control, but then the way they are released, the way the events, the data is released, the data for inflation, the way it is released, the data for employment, the way it's released, the data for interest rates, the data for interest rates, the way it's released is scheduled, is planned, right? So if inflation increases in the US, well, the US economy, the US government, the Federal Reserve, which is the central bank of the US, may not actually have caused the inflation or made it happen. But then the way the data is released is controlled. So we know, what I mean by controlled is we know when the inflation data will be released. Now, we don't know whether it's going to be positive or negative. When it is positive, it has an effect on the market. When it is negative, it has an effect on the market. Okay, so we can then know that, okay, now the inflation data in the US is going to be released, let's say tomorrow. We know that it's going to be released tomorrow, right? But we don't know if it's positive or negative. But then we can position ourselves to trade when that data is released tomorrow. That's what I mean by controlled. So it's not as if the data itself is controlled. The data itself is not controlled, but the way it is released and therefore what we can do with it is therefore controlled, right? We have some control over that. The employment is the same thing. If the employment numbers usually in developed economies, they have this data that they release every month. So they look at the end of the month, they will usually release data for the previous month. They will say, okay, the employment numbers increased, which means the number of new jobs that were created. So they track the number of new jobs that were created in the economy every month. What are the new jobs? This is June now. How many new jobs were created in May? So you see that data being released. How many new jobs were created in May? You see that data being released. When that data is released, we usually will know when that data will be released. And then when that data is released, we may not know whether it's going to be positive or negative. But when it's released, we will then see if it's positive or negative, and then we can then take action on that. Interest rates is the same thing. Okay, we know that interest rates are usually reviewed every time the Federal Reserve has a meeting. They usually have meetings 8 times a year, right? This year now, they had their first meeting in February. They had another one in March. I think they had another one in May, right? They had one in February, in March, then they had one in May, and then they are looking to have another one in June, right? Now, every time they have these monetary policy meetings, it's called monetary policy meetings, monetary policy committee meetings. And it's not just the Federal Reserve of the US that has it. Every country has it. Even in Nigeria, they have what they call the MPC meeting, the Monetary Policy Committee meeting. It comprises the central bank governor and usually a board of the most influential CEOs of the major banks in Nigeria, like Zenith Bank, Access Bank, UBA, First Bank, all of, I think about 7 or 8 of them, they are part of that board. It's the same way it is in the US. So they have, in the US, it's not like the CEOs of banks are not part of that committee, but they usually have regional Fed, right? So they have Fed for the Fed, they have the New York Fed, they have they have Fed, they have Boston Fed, they have Fed, the Federal Reserve. It's like CBN, regional CBN offices, regional central bank offices. And the governors of those regional offices are part of the board. So it's about 17 members in the US. Then plus the Federal Reserve chairman himself. They are part of that board. So they usually will have these meetings every month. No, 8 times every month, 8 times a year, sorry. And then, like I said, another one is come. They had like, I think 4 or so this year so far, 3. And then they're having another one this month. Okay, so we know when those events are happening. They are usually called FOMC meetings, FOMC. Okay, so they're usually called FOMC meetings, and then we usually will see them in the economic calendar. When is the next FOMC meeting? You will see it in the economic calendar, and we already know. We may not know exactly what they will do at that meeting, but we will know when that meeting is holding. Okay, we may not know what that means, what they will do exactly at those meetings, but we will know when those meetings are holding, and then we have an idea of what they might be doing in those meetings. So when they now do what we expect them to do, or otherwise, then we also will use that data to make trades. So this is the reason why we look out for economic data, because like I said before, in our previous class, if you don't look, if you're a trader and you completely ignore fundamental events, you just look at your charts. Oh, I need to buy here, I need to sell here, I will buy here and sell here. And you don't look at what is happening with fundamentals. You're not looking at what is happening in the news. The central bank of the US, for example, is having an FOMC meeting. You don't care what's happening there. You just go into the market and you're looking to do technical analysis alone. Of course, we're going to discuss technical analysis. That's a much broader topic, and we'll break it down and be taking it gradually, right? Because that one has to do with you just looking at charts. Those charts you see us looking at, that is what technical analysis is about, just looking at charts, analyzing the market based on data from charts. But now, you as a trader, you don't want to just do that. You want to be able to do that, but then also be able to look at the economy, look at economic events that are happening or that are about to happen. What are they? For example, this past weekend, OPEC had a meeting. OPEC is Organization of Petroleum Exporting Countries. OPEC, then there's what they call OPEC Plus now. So basically you have the OPEC countries plus Russia. Now, Russia is a major exporter of crude oil. If you know anything about oil, you will know that Russia is one of the largest exporters of crude oil in the world, right? So OPEC plus Russia is what they call OPEC plus. Now, this last weekend, basically yesterday, on Saturday and yesterday, they had this meeting. And then the meeting they had, some outcomes that came out of the meeting pushed the price of oil up. If you go to crude oil right now, you see that crude oil is currently at 70, US oil is at $73. Brent crude is at $77. Now, the reason why the price shot up like that was because of the news that came out of that meeting that was held. You see, so if you're a crude oil trader, you can't just come now and say, okay, I'm only going to trade based on what the charts are telling me. I'm also going to make sure that I'm trading based on what's happening all around the world. OPEC cannot be having a meeting. I'm a crude oil trader and I don't know what they're doing there. I need to know what they're doing there. I need to watch and wait and see what they're doing there before I decide to continue my trades. Because if I don't, I will be surprised. You see? So that's what you want to do. You want to make sure that as a trader, you are looking out for what is happening. Even me, every day I look into the market. As I'm analyzing the charts and looking for where I might enter trades, I'm also looking at the economic calendar and asking myself, what's likely to happen today, what's happening to happen tomorrow, what's likely to happen this week. Okay, that gives me a certain clarity. I'm like, okay, if I see that there's going to be a news tomorrow or a news on Friday or a news on Thursday or Wednesday, I keep my eyes on those news events and vis-a-vis my analysis in the market, and it tells me, okay, be in the market at this time, make sure you are not in the market at this time. So this is the reason why economic events are very, very, very important. So we're not just talking. And then also there are strategies for trading, that there are some traders that they only trade these economic events because they tend to move the market. Okay, and then when the market moves, that's when you make money. If the market is not moving, you can't make money. So when the market is moving, you make money, right? So when you have an event that moves the market, you can make money from it, right? But then there are different ways to approach it. Okay, so now let's look, for example, let's look at some events that moved the market last week. Okay, let's look at some events that moved the market last week, so we can use it to understand a few things. Let's go to Monday. Monday was what? Oh no, this is far away. Monday of last week was what day? Monday was 30th. Okay. 30th, let's go to 30th. Okay, Monday was 30th, fine. So let's see, what we're going to be looking at is for economic events. Now look at the way it is. This is the date. So you come to this website. I've mentioned this website before the other day. So these websites, there are two of them. Economic calendar. So the first one we mentioned was www.forexfactory.com. forexfactory.com. Then the next one we talked about was www.investing.com. Investing.com. Excuse me. Investing.com, right? So let's go to this. Right now we are on Forex Factory. So what you will notice on the Forex Factory is that you will notice that there's dates, right? There's a date for the news event. There's a date. Then there is the time. This is the date. This is the time. You notice the time here. Then you will notice the currency that it affects. What currency does it affect? You find that the currency that it affects, that's the currency that it affects. Then these colors you are seeing here, these folders, they are called folders. These folders that you are seeing here represent something. You notice that they have different colors. You have the gray color, you have the yellow color, you have the, like orange or brown color, then you have the one that is red. Now, when you come to this website, you notice that this is, now when you put your cursor there, it shows you that this gray one, this gray folder is non-economic. So this gray folder, you usually see it when there is a bank holiday, when there's a holiday, when there's a holiday in the US, or there's a holiday in Canada. There's a holiday, like last May 29th, there were holidays all around the world, right? Even Nigeria too had holidays, right? So there was a bank holiday in the Swiss economy. This is Swiss franc, CHF is Swiss franc. So that's the Swiss economy. I said the other day that currencies represent economies. Naira represents Nigeria. USD represents the American economy. GBP represents the Great Britain economy. JPY represents the Japanese economy. So whenever you are looking at the currency that's been affected, you are looking at the currency, but if that currency, what's happening with that currency reflects what's happening in the underlying economy, which is the economy that has that currency. So in this case now we have CHF. CHF is Swiss francs. Swiss francs. Which country uses Swiss francs? Switzerland. So Switzerland had bank holiday on last Monday. GBP is pounds. And who uses pounds? The UK, right? The UK uses pounds. They had bank holiday as well. Euro, what's Euro? Euro is used by the Eurozone, the Eurozone economy. You know, you're talking about France, Germany, Holland, all of these countries, they use the Euro currency. So basically, whenever you see Euro, is referring to the whole Eurozone, the whole European economy, Japan, Germany, France, you know, Belgium, all of these countries are that are in the Eurozone are affected in that basket, in that Euro basket, right? So Euro also had a bank holiday, you know, France had bank holiday, Germany bank holiday. Then the US also had a bank holiday, then NZD and all that. So now that's for the first color. That's for the first color. The first color is gray. It's non-economic. It's only used for bank holidays. Anywhere you see gray color on this chart, you know that is referring to a holiday in that particular economy that is depicted by the currency here, right? Now, the next one is the one that's yellow. That one is low impact expected. You see it displayed there, low impact expected. It means that even though this is an economic data, it does not really move the market that much. It doesn't really move the market. In most cases, it doesn't even move the market at all. So now what you are seeing here, this is what I said earlier when I said that economic events are scheduled. So every week, there are things that are going to happen in the market. There are news events that are going to happen in the market. There are things that are already scheduled in the economy. For example, what I mentioned when I said the MPC, the Monetary Policy Committee meeting that I call the FOMC for the US. Okay. Now, whenever that meeting is going to, the number of times it's going to be held this year is already scheduled. They know it already. They know it already. They probably even know it for next year already. For the next 5-10 years, it's already scheduled. They know when the meetings will hold. And then what they do is they put it on calendars like this for us to know, okay, this is what is going to happen, right? On so and so day. You will see it happen for every week. What's going to happen for this week now? We will get there just now. What's going to happen for this week is already there on the calendar. You now, as a trader, all you just need to do is come to this calendar and look at what is likely to happen this week that is likely going to move the market. You come to this calendar and you see it there. It's already there. Be it oil, it's already there. Whatever you are looking for is already there, right? Because some people already know what's going to happen because it's already scheduled. Okay, you may not know the exact outcome. You know, you may not know the exact outcome, but you know when the meeting itself, what the data itself is going to be released. And when the data is released, that's when you now know that, okay, this is what the outcome is. So we have all this, right? We have the yellow ones. The yellow one is non-impact, low impact, sorry. Then the one that is a bit like brown is medium impact. So this medium impact has the ability to affect the market a little bit, but most of the time that is not also what your focus. That's not our focus. Our focus is on the one that is red, this one that says high impact. See, that's high impact. That's what we are looking for. We want to look for which event. So we come into this week now. Let's look at this week now. This is this week. Okay, before we get there, just hold on, let me finish this. Right, so we look at this week now and we're like, okay, so what event has high impact? What event has high impact? Now look at this. This is Monday, the 5th of June, right? Monday, the 5th of June. Dates, there's dates there. Monday, 5th of June. You see the different times now. Which one has high impact here right now? You see we have one this morning that had high impact. This is CHF, which is Swiss francs. Okay, Swiss francs, a high impact, and is CPI MOM. What this means is that this is actually an inflation data. Anywhere you see CPI, you know that that's an inflation data, right? It's an inflation data. So that is the meaning of that. Now, whenever you come there and you see that happening, you see that's going to happen, you're like, okay, let's watch what's going to happen at that time, because that's the most important thing you're going to be looking at. Then for today, again, the last one we're having today is this one that affects the dollar, it affects the USD, and it's ISM Services PMI. This ISM Services PMI is what we're going to be waiting for by 3 p.m. See, so 3 p.m. today, there's another event happening, and this one is affecting the dollar, right? So every currency that everything that is every currency in the market is likely going to be affected because the dollar ties into everything. The dollar ties into everything. When we go to our chart now, you notice that almost every currency we have here has dollar inside. Even the ones that don't have dollar have affiliations to the dollar, because the dollar is what is the major economy, is a major currency for world trade. The dollar is a major currency for world trade. The dollar is used for more than 80% of world trade. And so even when you have a currency like this that does not have the dollar attached to it, is still affected by the dollar in one way or the other. It's still affecting the dollar. The dollar is still affecting it in one way or the other, right? So that's very important for us to keep in mind when we think about these events, especially dollar-related events. When you see dollar-related events, it tells you that it's likely going to move the market, the entire market, in one way or the other, especially if it is very high impact. If it is high impact like this, then if the data that is released itself is very, very high, right, is very high impact, then of course it will move the market in a very significant way. Okay, so now after you have noticed, you've identified the currency, the time, the day, the time, the currency that is going to be affected, the high impact. The next thing you want to look at is these numbers that are on the right. Look at these numbers that are on the right, right? These numbers. So you will see there's graph, there's previous, there's forecasts, there's actual. So you see how I did it from right to left. From right to left. Okay, so I'm looking at it from right to left. The reason why I look at it from right to left is because this is the data for previous. This is the old number. For this particular currency now, look at this. This is New Zealand dollar, NZD, New Zealand dollar. Then that this happened on Wednesday, the 24th, right? 24th of May. It was official cash rate. Official cash rate. It was high impact. Okay. Now, when you look at this was 5.25%. So this 5.25% is the previous one. This 5.25% is the previous one, the previous number that was released, the previous data. Remember, I said this data comes out every month. This is the previous data that was released. Then this is forecasts. This is actual. So this actual is the real data that comes out. This forecast is usually, it's usually what analysts, like economists. So what economists do is that they look at this new month. They look at this new month, okay? Now let's look at this now. Let's look at this ISM services, for example. They look at this new month and then they ask themselves, okay, this was released last month, right? This is previous, 51.9 for ISM services. It was released 51.9. Now, you don't need to know what these numbers mean. That's not your business. Your business is, okay, is this, which news is going to move the market? That's what you're looking for. So what these numbers mean is not your business. Don't bother about that. That's not important. What's important is that you identify the high impact news and then you watch the market at that time. You make sure that you are not in any trade. You just manage your trade at that time. That's the most important thing for you to know. You don't need to know the meaning of the numbers. Okay. So, but you have to know that this number 51.9 is the previous. So it comes out every month. So this is the previous one that came out, 51.9. Okay. Now this 52.6 is the forecast. And you see forecast. That's the middle one, forecast. Now, what is forecast? Forecast is what economists do. Now, usually maybe economists at big banks, banks like JP Morgan in the US, banks like Bank of America, these are very big banks, and they have investors and they have economists. And now what these economists do is that economists look at a whole lot of data in the interim. Okay, so this data was released last month. From last month to this time, before the new one is released, they gather a lot of data. They gather a lot of data in the market, information in the market, what's going on here, what's going on there. They gather it, and then they make a forecast that, okay, these ISM services, well, it came out at 51.9% last month, 51.9 last month. Based on the data that has come into that we have access to over the past 1 month since the last one was released, we estimate, we anticipate, right, that this next one that will be released today will be 52.6. That's what forecast means. So you will hear this is usually you hear that this data comes from either analysts, market economists, and those guys from the huge banks, because that's their job. Their job is to gather data in the market and use it to make forecasts as to how investors should be investing. And the reason they do that is to enlighten the investing community, right? Because these banks are where a lot of big investors keep their money. So they want to be able to enlighten investors that, okay, this is what's going on, this is what's going on, this is what's going on based on the data that we have. So of course, when big investors are looking at this data, even small investors like us that have small capital of $10,000, $5,000, $1,000, we also need to be looking at what the big guys are looking at, because that's smart. You want to know where money is flowing to so that you can join the train, right? So that's what it is. That's what forecast is. Then the actual is the one that the data itself that is actually released. Sometimes, like in this case now, you see that the actual is equal to the forecast. Sometimes the actual is different from the forecast. Look at this now. GBP, CPI. The former one, which is the previous, was 10.1. The forecast was 8.2, but the actual was 8.7. You see, so this is the way it usually would be. This actual is the one that is actually released at that exact time. For example, now today we have this ISM services, right? The actual is the one that will now be released at exactly 3 p.m. And when it released, it will now appear here. Now you can see this place is empty. The place for actual is empty. But when it's released, the news will eventually appear here. You see? So those are the things we are watching in the market. So you've seen that now. So these are some of the things we look at. Every day you look into this market, you wonder, okay, what is it? Look at this one now, have to do with unemployment claims. That's also an important data. It's from last week. This is crude oil, this FOMC meeting in minutes, crude oil inventories. All of these are high impact events because they are going to affect the economy in a major way. Look at this one now. This was Upper Friday. This one was core PCE price index. That's also important because it's high impact. It's red folder, high impact, right? So when we finish this class now, please guys, go to this website, forexfactory.com, and start looking at what I just said now so that you also can begin to understand what I'm saying. Because if you don't go and practice these things, you'll probably not, it looks very theoretical, but it's not theoretical, it's very practical, right? That's why I'm showing you exactly from the website itself. I didn't copy and paste, I'm just showing you exactly. Okay, so every day there is news event for every day. So you go out, you look at, you can see what's planned for this week. Okay, you can see what's planned for this week. Look at this now. You see, this is Monday, right? Monday. Then when you click on more, you see Tuesday. You scroll up again, you see Wednesday. You scroll again, you see Thursday. You scroll again, you see Friday, right? You scroll again, you see Friday. So that's how it is. You can see for the whole week. You can even see for next week. You see, this is Saturday, this is Sunday, this is Monday next week. So you can always see it far into the future. So it's not something that surprises anybody. It's something that you can look into the future and see what's going to happen in 1 month, in the next 2 weeks, in the next. You don't have to look too far away like that. You can just look at it every day or every week. You look at the whole week. You look at it week by week, and then you have that in your mind. I usually will look at it week by week, even though I go back every day to look at it, but I usually look at it week by week. I like to at least have a clear picture ahead of time, what I'm expecting to happen this week, right? So it helps me to make plans and say, okay, this is what I'm expecting, this is what's going to happen, this is what I expect to happen, these are the currencies I should be trading, these are the ones I should avoid because of what's going to happen this week, right? So that's basically what it is. And like I said, the most important ones are the ones that have to do with inflation. When you say inflation, anywhere you see CPI, anywhere you see CPI, that's inflation. CPI is consumer price index, right? Consumer price index. Consumer price index. Price index. So that's very important. Anywhere you see CPI, that's very important. Anywhere you see employment or unemployment, anywhere you see employment or unemployment, right? You know that that's also high impact. That's very important. Because why is that? Why is that so? Because these things are what affects the economy of the world. Okay, when if Nigeria, for example, I think the real data in Nigeria says that there's over 70% unemployment, right? There's no way an economy that has an unemployment rate of 70%, unemployment rate of 70%, there's no way that country can be a serious country, right? It's not a serious country. The economy is definitely not doing well. If the economy is doing well, there will be massive unemployment. There will be massive opportunities for people to maximize themselves, improve themselves, and get employment for themselves. So that people cannot get employment, it tells you how good the economy is or how bad the economy is. That is what it is. So that's the reason why, just the way it is for Nigeria, that's the way it is for America, that's the way it is for all countries. When the unemployment numbers are high, it's not good for the economy. It means that the economy is not good. It means that the currency is going to be falling. It's going to be selling. When unemployment is high, it means that the economy is going to be, the currency of that economy is going to be selling. When unemployment is low, it means that the economy is doing well. Therefore, the currency is going to be appreciating. You see, that's the thing. Then when it comes to interest rate is another thing that is very important. So when we talk about interest rate, anywhere you see cash rates, you see, let's look for some of them. So you see cash rate, you see official cash rate, you see, this is New Zealand, official cash rates. Okay, what else do we have there? Let's see if we have anything. Then you see FOMC. FOMC is also has to do with interest rate. That's for the US. Now, different countries call it different names, right? But they are all referring to interest rates. So you have FOMC, okay? Then you have main refinance rates, or you see refinance rates. Refinance rates. So refinance rate is what the Eurozone calls their interest rates. So when you see refinance rate, you have cash rate, you have FOMC rate. Let's see, I think we have one for Canada this week. You see BOC rates, right? BOC rates, overnight rates. Okay, so you see BOC rates, overnight rates. So all of this is referring to interest rates, and it's very, very high impact. So anywhere you see rates, overnight rate, cash rate, FOMC rate, refinance rate, anywhere you see any of those on the chart, you just look at the currency beside it. Which currency is this affecting? All right. So you know the currency is affecting, and you know that that is a very high impact event. Okay. So you keep an eye on that and make sure you're looking at it before you even get into the market. So it's very important, guys. Okay, so these are the most important events to look out for the market. This is broadly the most important events that you want to be looking out for in the market. Okay. So